Good afternoon and welcome to Banking Forum 2025. I am Virpi Vuorinen and I'm the chair of the ECIIA Banking Committee. I'm representing the Netherlands in the committee, and in my daily work I have the pleasure to lead the audit team of ING. I am together here with my wonderful colleagues in the ECIIA Banking Committee, and you will get a chance to get to know each one of them as they will be facilitating the various topics on the agenda today. I would like to thank Helaba Bank for hosting us today. We are streaming live from their office in Frankfurt. The key theme for us today is the highly uncertain environment and the rapidly changing environment that we live in. Our financial institutions need to manage the highly uncertain geopolitical situation. They also need to be able to deal with the rapidly changing technology landscape, and as always, also the continuously evolving regulatory landscape. We will be reflecting what that means for us as internal auditors. As you know, we don't operate in isolation from the rest of the organizations, and we too need to think about how do we adapt to the change around us. We should probably work with solutions on how we can embrace the change and what does it mean for us. Does it mean that we need to be more timely and doing more forward-looking audits of emerging risks and complex themes? So it is against this backdrop that we have developed the program for today. We want to provide you a holistic view from all our key stakeholders on these important topics today. On the agenda, we have first our keynote speakers, who are two CEOs of financial institutions, and they will be sharing with us how they navigate the environment and also what their expectations on internal audit are. After that, we will be engaging in dialogue with the representatives of European Central Bank on topics around governance, what does good governance look like, and what are the expectations on internal audit. After that, we will move to hear from key stakeholders, audit committee chairs, on their expectations on internal audit. And we will be also discussing the theme related to how do third line and second line collaborate and coordinate their activities. And we will also be reaching out to our peers in other industries to learn best practices from them. With that, I would like to introduce the keynote speakers today. We will start with Mr. Slavomir Krupa, who is the CEO of Société Générale, and he's also the president of European Banking Federation. Prior to his current role, Mr. Krupa has held various senior management positions in Société Générale, including being the CEO for Société Générale Americas. After Mr. Krupa, we will hear from Helaba Bank's CEO, Mr. Thomas Cross. And before his current role in Helaba, he has also worked as the partner and managing director in BCG in the Frankfurt office, and before that he has held various manager positions in the UniCredit Group, just to name a few. So with that, I will hand over to our keynote speakers.
Ladies and gentlemen, it is a pleasure to be with you today, and thank you for your invitation and for the opportunity to address such a talented audience, an audience accustomed to navigating the complex dynamics and profound transformations shaping our industry. During this conference, you will explore the challenges and opportunities for banks in a world undergoing rapid transition. I would like to share with you my perspective, both as the CEO of a large European financial institution, Société Générale, and as the president of the European Banking Federation. What strikes me most today is the unprecedented level of uncertainty facing the banking sector. The range of possible outcomes has widened over the years, and the depth of the transitions we are undergoing is unlike anything we've seen before. Investors, regulators, and institutions alike are grappling with a landscape that is shifting faster than ever. In many ways, the remaining foundations of the geopolitical and economic world order shaped in the 90s are still shaking, with little certainty on what comes next. Armed conflicts are multiplying, some at Europe's very borders. Political polarization is intensifying across Western democracies. Public debt continues to rise sharply. Macroeconomic conditions have changed dramatically. We have exited the era of negative interest rates, moved through monetary tightening and inflationary pressure, and now enter a phase of moderately high rates and slow growth. Economies are adapting to disruptions in the international trade order with gradual consequences on supply chains. At the same time, technological acceleration and climate change are no longer distant scenarios. They are present-day realities, with extreme weather events becoming more frequent and more severe. In this context, Europe stands at a crossroad. As Mario Draghi highlighted in his report on competitiveness, Europe's growth has been slowing for years, if not decades. The gap with the United States and Asia has widened, and we now face the risk of entering an era of lower for longer growth. This is not just an economic concern, it's a strategic one. If we want Europe to remain prosperous, innovative, and secure, we must act decisively. The investment needs are immense. And to reach, for instance, net zero by 2050, we must decarbonize our economies while simultaneously boosting innovation and productivity. We must also invest in our energy security and defense capabilities. According to the Draghi report, Europe faces an annual investment gap of 800 billion euro every year. Closing this gap is not optional. It's essential for our future. It will require a bold and comprehensive plan to rebuild economic leadership. I believe deeply that banks can be, need to be, one of the ingredients of this strategy. And it's a tremendous opportunity for our industry. Europe is a continent rich in savings. The challenge is not the availability of capital in absolute terms, but our ability to channel it effectively towards productive investment. This is where banks have a critical role to play in Europe in particular. And to do so, we must address structural inefficiencies built over time in our regulatory system and in the set of incentives provided to our industry. Over the past 15 years, European banks have adapted to a complex regulatory landscape and have prioritized resilience, often at the cost of growth. It's time to shift towards resilient growth. This means simplifying regulations to unlock capital, enhancing balance sheet agility, and enabling strategic partnerships that strengthen our financing capacity. As the Commission begins work on simplification and competitiveness, we expect meaningful changes to the prudential and supervisory frameworks. To support Europe's strategic growth objectives, we need to pause the upward trend of increasing capital requirements, streamline the capital regulatory framework to eliminate fragmentation and duplication, and ultimately make more efficient use of available capital resources, essential for credit availability at a time of rising financing needs. Of course, all of this is if Europe is serious about closing the gap with its competitors. We also need to strengthen the connection between savings and investment. The Capital Markets Union and the Savings and Investment Union must become operational realities. Tools like securitization, which remain vastly underused in Europe, can play a key role. We must also address the missing piece, reforming Solvency II, developing pension funds and mobilizing long-term capital. Because the Savings and Investment Union is not just a matter of regulations or level playing field from a legal standpoint or regulatory and supervisory standpoint. It is about where is the capital and how can it be invested in productive, innovation-focused projects and endeavors. At the same time, our industry is undergoing disruptive changes that present both challenges and opportunities. ESG frameworks are still evolving. Artificial intelligence in transforming risk allocation, customer engagement, and operational efficiency. Blockchain is reshaping transaction models. Cybersecurity has become a systemic concern. And yet, investment management has shown remarkable adaptability exploring new asset classes, embracing new strategies, and growing. Technology holds immense promise. AI can streamline compliance, personalize customer experiences, and enhance fraud detection, to name a few. But it also requires strong data governance, ethical standards, and transparency to maintain trust. Cyber threats, meanwhile, require a shift from reactive defense to predictive resilience, with coordinated industry responses and sustained investments. In this environment, the role of the second line of defense and internal audit is more vital than ever. Internal audit is no longer just a control function, it is a strategic partner for meaningful transformation. It provides independent assurance not only on compliance and risk management, but also on innovation, effectiveness, data integrity, and the resilience of digital infrastructure. And as banks embrace AI, blockchain, ESG, and new business models, internal audit must evolve, developing new skills, leveraging technology, and embedding itself early in the change process. As an internal auditor, you are uniquely positioned to connect the dots across the organization and assess the efficiency and resilience of the value chains of the bank. Your role is central to ensure a more efficient control framework, especially after a decade of considerable reinforcement of the size and obligations of the second line of defense. Your role is also to identify emerging risks before they materialize, challenge assumptions, and ensure that governance frameworks keep pace with innovation. In a world where trust is a competitive advantage, internal audit plays a central role in safeguarding reputation, reinforcing transparency, and supporting long-term value creation. And as regulatory expectations remain high and grow more complex, internal audit helps institutions be not just compliant, but more importantly, confident and ahead of the game. Internal audit is a cornerstone of operational resilience and a catalyst for responsible growth. So, ladies and gentlemen, we are living through profound change, but it is also a moment of great opportunity. European banks can be a driving force in financing the future of our continent. To do so, we must unleash our full capacity, simplify our operating environment, and invest in innovation, security, and sustainability. None of this is possible without strong governance, robust risk management, and a forward-looking internal audit function, one that helps us navigate complexity with clarity and purpose to build a stronger and more competitive Europe. Our business is about taking risk. So the purpose that we have is to manage these risks effectively and do our job at the best of our ability so that risk can be taken and a growth factor in the entire society, in the entire economy of Europe. And you play a role in making sure that this purpose of ours, which is to take risk for others, for the economy, is done in the best possible, most resilient, and most responsible way. Thank you for your attention today and your partnership as we move forward together.
Dear ladies and gentlemen, dear colleagues, it's a great pleasure to welcome you here in Frankfurt, from Frankfurt, a city at the very heart of Europe and one of its most important financial centers. Frankfurt is home not only to the European Central Bank, but also to a diverse ecosystem of international and regional banks, regulators, and other market participants. As Helaba Group, headquartered here in Frankfurt, we see ourselves as a European bank, with the majority of our almost 7,000 employees based in Germany, but with a clear international outlook, serving clients across the continent as a reliable commercial bank, a central bank and partner for the German saving banks, as well as a committed regional development bank. Our identity is shaped by Europe's diversity and by our commitment to trust, responsibility, resilience and value creation. That's why I'm particularly pleased that the ECIIA Banking Forum 2025 is taking place here at Hellerberg. The ECIIA is the leading European platform for banking and audit professionals, a forum that brings together those who shape governance, resilience, and trust in our industry. And this matters greatly today because Europe is at a crossroad. We must sharpen the overall European business model. We must define how we want to compete, not by copying others, but by playing to our strengths. And we must decide how we strengthen values such as responsibility, resilience, and trust in our financial sector. And let me say this clearly. Trust is the hardest currency we have. It is exactly at this intersection between Europe's strategic challenge and the evolving role of internal audit that our discussion today will take place. As we reflect on this, it becomes clear. We are meeting at a critical moment. Europe today stands at a turning point. The challenges we face are profound. Economic pressure. Growth is modest. Investment volumes are far below those in the US and in China. And demographic change is reshaping our labor markets. Geopolitical uncertainty. War on our continent. Fragile supply chain. New dependencies in energy and technology demand resilience and strategic autonomy. Digital transformation, artificial intelligence, blockchain, and data-driven business models are reshaping our industries. Europe must keep pace, but in a way that also reflects our values. Sustainability and climate transition. The path to net zero requires unprecedented investments, but also exposes us to transition and physical risks. Again, this backdrop, Europe must sharpen its business model. Less European bureaucracy and more European partnership. Will not win by speed alone or by sheer size of the investment. Our path must be different, aligned with our social and environmental values, and grounded in respect and trust. It is Europe's, it's our chance to lead with a distinctive model, one that is credible, stable, and sustainable. A question often raised in that context is whether regulation holds Europe back. And my answer is clear. Sometimes yes, but regulation in Europe can be and frequently is also an enabler. Why? Because clear rules create acceptance and trust. Customers, investors, and supervisors all demand certainty. And this certainty is the foundation on which our business model rests. As banks, we are used to innovate within regulated environments. In fact, it is our daily business, or at least it should be. At the same time, regulation must be balanced, predictable, and uniformly. It should set principles, not micromanage every detail. It must safeguard stability without preventing innovation. And it should provide orientation while leaving space for banks and businesses to adapt. It should be harmonized across all member states, but reflect also regional and local specifics. But regulation and governance alone are not enough. This is exactly where internal audit plays a crucial role. The theme of this year's ECIIA Forum, future-proofing the profession, could not be more relevant. Internal audit should move far beyond its classical role as an assurance provider. The future of the profession lies in creating tangible value for decision makers and for the organization as a whole. I see three dimensions: deep organizational knowledge and insights that spreads across all business lines. Audit understands the processes, the structures, and risks of the bank in a detail. Combined with the ability to look across silos and see the bigger picture, this knowledge becomes extremely powerful. Secondly, analytical tools and strategic perspective. Modern methods such as data analytics and AI will become standard. But they must be paired with the ability to interpret findings in a strategic context. For example, ESG, transformation, cultural change, or digital business models. And thirdly, provider of trusted information for decision makers. Internal audit must position itself as a reliable information provider for management boards and supervisory bodies, delivering independent, fact-based insights and foresights that inform decisions at the highest level. This is not just about assurance. It's about enabling leadership with insight, foresight, and trust. Ladies and gentlemen, as we look ahead, one message becomes clear. Europe stands at a crossroad, but it also holds a unique opportunity. Europe does not have the largest budgets, nor does it always move at the fastest pace. But what we do have is something also very powerful, a model built on responsibility, resilience, and trust. For Helaba, this means serving our customers based on long-lasting partnerships, always putting people at the center of a resilient business model, and combining innovation with responsibility, and keeping trust as our true currency. In this vision, internal audit is not only a guardian of compliance, it becomes a partner in shaping the future, offering assurance, insights, and foresight. So if Europe takes its values seriously, uses regulation as an enabler, and acts with unity, then our model will not only endure, it can truly lead into the global competition. Thank you very much, and I do wish you an insightful dialogue today.
Thank you very much to our keynote speakers who shared really valuable and inspirational reflections with us today. Now it's time to move to the panel discussion with the ECB. And before we do that, I would like to introduce to you my Banking Committee colleagues who will be facilitating this discussion. We have here Claudio Testa, who is representing Italy in the Banking Committee, and he is the Chief Audit Executive for Intesa Sanpaolo. Claudio has been active member of our committee at least for 7 years already. And together with Claudio, we have Maria Ronto-Gianni, who is representing Greece in the Banking Committee and is the Chief Audit Executive for the Alpha Bank. Maria joined the committee in 2021 at the same time as I did. So I will now hand over to the panel discussion.
Thank you, Virpi, and good afternoon, everybody. It's a pleasure for me and Maria to manage as a facilitator of this session. That is a very important session because I'm sure that not only we as a member of the ECIIA Banking Committee, but all the participants are very interested in understanding the ECB vision and view about the role of internal audit in this rapidly changing world. We have listened to the CEO's introduction. They are talking about an unprecedented level of uncertainty in front of us. We will divide the session into two parts. The first will focus on key findings relating to audit functions and arising from ECB reviews, and we will also discuss the ECB expectations for our function. And the second part, that will be managed by Maria, will focus more on updates regarding specific ECB initiatives that closely affect our profession, for example, the SREP reform, the guidance on governance and risk culture, the new IMAS platform for following up the findings. That said, it is our pleasure to introduce our two speakers. Katia Mastrodomenico is Head of Division, Sustainable Banking and Governance. She comes from Italy, and she has a quite long experience in banking supervision. And so, Maria, you can introduce Florian, please.
And we welcome you all, and welcome Florian Naring, who is from France and is the head of division for integrated tools and remediation, and also has a long history since the establishment of the SSM functions across Europe. So welcome to both of you.
Well, so let's get started with Katia. First of all, I would ask you from the two speakers some reactions from our opening speech.
Thank you very much for the invitation. I'm very glad to be here with you today. So the introductory remarks of your speakers were very inspirational and really resonate also to what we see from a supervisory perspectives in our own world. The key topic of uncertainty in the current environment and of the emerging risks are very clear in our agenda as well, and in our analysis of the external landscape. And as they mentioned, this brings, of course, risks, but also opportunities. And together, I think supervisors and the banks, in their, of course, different remit and roles, have for sure quite a huge responsibility here. And I hope that today in our dialogue, we can start digging deeper into this and also building on our common grounds.
Yes, sure. Some from you, Florian?
Thanks, Claudio, and good afternoon to everyone. I think this is a pleasure to be again at the ECIIA, and I value a lot this forum because I think it's good that we as supervisors have the opportunity to have a channel of discussion, with the internal audit function of banks. I think, of course, you are from the banking side and we are from the supervisory side, but we share, and I think we discussed this in the past, we share a bit similar concerns and focus in the area of the control framework, which is so important for banks. I think it was mentioned by one of the speakers in the introduction that given all, this risk and also opportunities that come, the internal audit function has a strong role play there, and happy to discuss a bit more concretely, the balance between, keeping the guardian of the control framework and how to adapt on the other hand to this changing environment. So very happy to discuss this with you this afternoon.
Yes, sure. So let's start with your expectation in our role, starting from the key findings deriving from the ECB supervisory activity. And so I know that Ms. Mastrodomenico prepared some slides.
Indeed. Can we share?
Okay.
Oh, okay. Yes. So, indeed, the idea of these slides is to share with you our findings around two key elements: the risk appetite framework and, of course, the audit function. Starting from a common point, a well-known point. So, internal governance and the risk management have, as you know very well, been part of our supervisory priorities since the start of the SSM. Of course, there is no need to explain to this audience why. Also, the CEO have mentioned this. Sound governance framework are really the basic for I would say, sustainable risk-taking. Risk-taking is your mandate as banks, is your core business, is the sustainability of the bank's activities while taking risk. Really the key dimension making the difference on which governance and internal control function play a big role. So moving from this very basic concept at the ECB, we have been running in these 10 years a very large number of activities, both horizontally in thematic reviews, deep dives, horizontal project, and on a day-by-day basis by our supervisors and inspectors. Of course, we are proud to see some important progress along the way and the journey. And this progress, I think, affects mainly the setup of the management bodies, the setup of the internal control, control function, the knowledge and the skills of the key element of the whole governance framework. At the same time, we observe that the world around us is changing, risks are changing, emerging threats are coming out, and so as a consequence, even the governance and the internal control framework has to evolve and scale up in order to keep the pace. And so and this is one of the elements that I will highlight in my presentation. And then the other point, which is also really key, we have understood the importance of data and risk data, business data, and in the current environment, the power of data will become even more important, and this is still a point, of course, of attention for the entire, for all the internal control function. So now, moving deep to risk appetite framework. So the risk appetite framework is really the compass for us that the bank has to follow, because it sets, of course, the goals in terms of risks, aligned to the strategic goals, and it helps to orientate the whole structure. So we have conducted a benchmarking analysis on the risk appetite framework, looking at both the design and the implementation, and also here the key elements that we have assessed, and the outcome, the key takeaways. You can see them on the slides. So first of all, we noticed that compared to our first analysis, now the risk appetite framework is in general a mature framework in terms of ingredients. At the same time, we still see some outstanding areas of improvement. First of all, the oversight function from the bodies that are called to do this, and of course also the internal audit function might have something more to clarify here. Secondly, the coverage of the risks. Of course, the traditional risks are now a stable part of the risk appetite framework. But the emerging risks that also your CEOs have mentioned sometimes are not yet fully embedded, incorporated. And when they are, they need still to be translated and cascading down in limits and thresholds. Finally, the alignment between the RAF and the key strategic decision, the business decision, the rewarding decision, are still, if maybe they are defined, but then the implementation is still to be further reflected. And here, this slide focuses in particular on the independent review of the RAF by the internal auditors. As you see, first of all, the good point is that the independent review of the RAF is of course part of the program, but at the same time is the depth of the assessment that can vary. And here, it's not a matter really of frequency, 1, twice per year or per every 3 years, but because of course this is based on your own plan and risk-based plan. But once it is done, it's important that then it's really made on a risk basis framework and really is comprehensive. So from the setting of the goals, of the objectives, until then to the very last point of the implementation in the business line. Now the internal audit function, the benchmarking on the internal audit function. Also here we have basically explored the governance and the organization, the resources, the methodology, and the organizational position. Important improvement, what we see compared to the very first analysis of the SSM, we are happy to see that the internal audit function is now well positioned in the organization in terms of standing, in terms of reporting lines, in terms of overarching stature, methodologies, and investment in resources. At the same time, so of course, even if some, also in this case, some elements of concerns remains. First of all, we have already discussed the overall oversight of the RAF, but in addition to this, what we observe is sometimes a limited involvement of the board and of the audit committee in the overseeing of the internal audit function, so the relationship between you and the board. Already covered the point of the comprehensiveness of the risk taxonomy, basically the types of risk that you assess and the in-depth assessment. Of course, resources and staff, it remains a core topic, not only in terms of quantity of resources dedicated to the internal audit, but also the quality, and how you could then leverage on the new technologies to maybe mitigate the resources impact, and finally the follow-up, of course, of the findings, which remains quite an important open point. In this slide simply reflects basically the findings, and in particular the measures concerning the internal audit that are still open in the JST's assessment, and they are of course organized along the 4 areas that I have mentioned. An important point on this slide is that we have highlighted the number of severe findings addressed by measures that are still open, because Florian will mention in his presentation is this one, the area on which the JST will focus more. And finally, this is for your awareness. Okay, so beyond the findings related to you, to your function, in these slides you find basically a recap of the open measures and their respective severities of the findings that are still open concerning the overall governance and internal control framework. We have thought that this is an important information to be shared with you. Why? Because we would have expected that your focus going forward would also be on the measures planned for addressing these findings. And so, to conclude, we have observed important progress. Still, areas of attention remains, and it's important for us, this concept, that by tackling these areas of attention, basically this will give your function and the banks more grounds even to face the uncertainties coming from the external environment. On our side, of course, we will focus on remediation and on our toolkit, and we hope that our dialogue will really help both us and the banks in this journey. Thank you.
Thank you, Katia. Very interesting. A lot of inputs, a lot of feedbacks for us. First of all, I would say that how is important our role in RAF, as well as how is important in the following up. Second, I would ask you about the number of findings. It seems to me that about internal audit, the number of findings is reasonable. Is not the internal audit is not doesn't seem to be the first area of attention related to governance. But I would like to have a comment from you. And a further comment that is very important about the emerging risks and our role in this uncertain environment. If I think to the new risks, ICT, security, geopolitical, environmental, reputational, all these risks are non-financial risks, and probably I think that our role as internal auditor, we have the competences, we have the skills for supporting the board of director and all the other functions in being able to focus and managing in a better way these kind of emerging risks. Am I right? What do you think?
Thank you for these follow-up questions. So first of all, on the RAF, it's important to start by one consideration. So the definition of the strategic objectives and of the risk goals is of course a clear responsibility of the management body, and for the internal audit. So of course is not asked to challenge the definition of the goals per se, because this is not under their control, and this is also the same for us as supervisors. When we assess the RAS, we do not challenge, we do not, of course, interfere with the strategic definition of the goals, which is a clear responsibility of the management bodies. What we look at how these goals are defined, on which grounds, how these goals are substantiated in terms then of business actions, of controls. If there is coherence between these goals and the incentives that are given to the business structure, to the control structure, in order to implement them. So I see the internal audit, and it is really a parallel also with us in challenging the definition process, the monitoring process, and the implementation. This is the first point. The second point that you asked on the risks, on the emerging risks. So on all these new emerging risks, I do really think that the system as a whole, including the supervisors, and so also the banks and all the internal control functions, do really need to scale up the capacity, the capabilities in terms of approaches, in terms of skills, and in terms of tools. Because all the non-financial risks, do they require scenarios analysis, forward-looking capabilities, data, modeling, benchmarking of practices, and so these are all ingredients that really need to think of and scale up.
No doubt, very clear. Thank you. Some anticipation about the SSM priorities for 2026, and which are the risks that you think we should be focused with particular attention in the next audit plan?
Yeah, so of course I cannot spoil the presentation of the publication of the priorities.
But we can imagine we have some idea
that will come next in a couple of weeks. But you know, the risk identification and also the priorities will go in strictly, let's say, continuation with the past. Of course, the financial resilience stays an important element of the priorities, and the operational resilience as well. And so when I say operational resilience, of course, I talk and think of all the risks that also your CEO have mentioned and have highlighted. So as a consequence, Also for the internal audit function, the focus on these elements is still important, as well as the remediation, because I think also in the past cycle, remediation was one. Resilience and the remediation, they go hand in hand, and so this is also another big important driver for us.
Yes, for sure. Remediation is the first point every year in our audit plan, but we add the value if we are able to that our bank are able to remediate the weaknesses. Well, the next question is for you, Florian, about the evolution of the role of internal audit. What do you consider to be the most important topic for us? Some examples that we, as a ECIIA Banking Committee, pointed out as a possible path of evolution of the internal audit role. First, a more sophisticated use of data analytics and artificial intelligence. We have listened to something from the CEOs. A second evolution is about the collaboration and the more integrated vision with the other internal control functions. A third possible evolution is the continuous proactive risk assessment in order to be able to quickly and effectively identify the emerging risks. And a fourth evolution, according to our opinion, is the agile auditing. So in order to be rapidly and efficiently able to interact with our stakeholders. What's your opinion?
No, thanks a lot for this question. And maybe one addition I wanted to make on your previous question regarding the number of findings on internal audit as compared to other risk areas within governance, because I think it's also an important point. As Katia mentioned, there are findings on internal audit, but it's true that relatively to other governance areas, and you know that in the SREP methodology, governance is quite broad, there are maybe a bit less findings on audit. And I mean, the main areas where within governance we have a lot of findings for banks are, management body, risk data aggregation and compliance. Having said that, we expect the findings related to internal audit to be addressed. So that's the first point I wanted to make. And then on your question, I think, as mentioned by the speakers in the introductions, the environment is changing quite quickly. We see a lot of emerging risks coming, financial risks, but a lot coming from the non-financial area. And I think in this context, it's important that the internal audit functions remains to some extent stable to be really the guardian of the control framework. This is valid, whatever I would say the risks are. Of course, it does not mean that audit should not adapt. So this is the balance that needs to be found between keeping the safety of the control environment while being able to adapt. And you mentioned a lot of specific areas. And I will go briefly through them. I think first, regarding having a taxonomy and tools that allow quick risk identification, I think this is key and this is really needed. We do the same, I think, as supervisors to be able to adapt and anticipate quickly what new potential risks are. Maybe I will spend a little bit more time on the integrated perspective that audit has, because I would say this is really something unique that you have as internal auditors, a unique perspective on the whole bank. Besides doing the specific audits, I think you have this capability to connect the dots between different audits and then report to the audit committee or to the equivalent committee, to the management body on what is going on there. And especially if you see common patterns there, related also to maybe the culture of the bank, this is something that only you as third line of defense, I think, has in the bank. And I think this is even more important in the current environment. On the collaboration aspect, yes, I think internal audit should be connected to the rest of the organization as a third line of defense. So that's a tricky balance to find. And we see more and more, and we hear more and more from banks that internal audit is contributing as third line of defense to some strategic projects of the bank. I think it was mentioned being a strategic partner in the introduction. This is something that we see, and that helps the internal audit function not to be in its ivory tower. But I would say it needs to be a bit mitigated to make sure that this role and involvement remains as third line and independent line of defense. I think in the draft governance guide we mentioned a couple of mitigants there. I mean, making sure that the advising activities are different from the auditing one, making sure that, I mean, audit does not take really, does not have voting rights, for instance, in strategic business committees. I think this is a border which is important to keep. And I would say the same is valid when it comes to the reliance of second and first line of defense. I mean, I think it depends really on each specific bank, depending on the maturity of the first and second line. That's an important aspect, but we would still expect, I mean, the internal audit function, even in banks where the second line is very strong, to make sure that, I mean, the control framework is working properly. So I think that's for the role of audit by keeping being the guardian of the control framework. You mentioned other areas where, I mean, internal audit as a kind of function needs to adapt to the current environment, the agile auditing. I think it's indeed an approach that may be used. I mean, we saw it in a few banks, really to be able to have a flexible, quick opinion on something, but I think it needs to be tailored to specific needs. I mean, it really depends on what you want to do. If you want to do a deep credit file review, for instance, if you have some doubts on some portfolio, will this be the best approach? So I think it has some benefits, but the risks need to be considered.
Yes, clear, very, very interesting. It's not particularly important the methodology, but it's important the way we interpreted our role within the bank. Would you like to add anything, Katia, in this regard?
Maybe the only addition that I would like to do is about the AI tool and the digital tools to perform our function. Of course, we fully see the potential of those, which are we are ourselves in the piloting in the proof of concept phase for many of them. At the same time, keeping a sound governance framework also in the use of these tools is really key and essential for everybody, but maybe in particular for the internal audit function, given the role that it plays in the organization.
Okay, thank you. Also, Florian was mentioning about the strategic role of internal audit, being able to connect the dots. We heard from the CEOs the capability to balance the business needs with the sustainability. And so is something that is fascinating for me, the role of internal audit in the strategic path of the bank. So some ideas, Katia, with regard to our ability to identify and stay on the group's top risks. For example, what kind of role do you expect from internal audit on the strategic plans of the banking groups, both in the phase of the definition of the plan and then in the subsequent phase of implementation of the various projects that are within the strategic plans of the bank?
Thank you for this question, because it is a very crucial one. Also for my team, for example, which has the responsibility to work both on the business model, so on strategies and profitability, and on governance now. And we are looking for synergies, really exploiting the synergies between the two. So concerning the strategic planning, I see it very much like for the RAF, basically the same type of consideration. So the audit is moving more is a process type of strategic processes auditing framework. And so this is really the key point in my view. So is the strategy definition, which is I think really under should be under your lens. How the strategy is made, the check of the understanding of the external environment, the options that are considering when defining any type of strategic plans. Then the milestones, the intermediate objectives, in order to really then be able to monitor the implementation of the strategy, the reaction capacity along following external hits, the implementation, how the strategy is cascading in the subsidiaries, the coherence, then the how the goals are really checked, and then again the incentives. So and this is to also the connection with the risk appetite framework with the remuneration system. So I think there is quite an important role to play, even because as already said, you have the benefit of the holistic view, you have the benefit of accessing directly with the board and the audit committee, and so looking at all of that from the top and from a centralized position is really quite an important added value to exploit.
Okay, very interesting. I would say not easy, but challenging, and reasonably it is the way to increase our seniority within the bank, and to have this role that is an expectation to be part, a strategic partner of the business, of the board of directors, and so this is something for sure that we have to think about. My last question, Florian, is for you. About the use of artificial intelligence that Katia was already mentioned before. Does ECB see more risks or opportunities? And then about the methodology and our role, in my experience, it is something very important, the role of internal audit on the managerial models. So not only on the regulatory models, but on the managerial models, with or without the use of artificial intelligence. Where does the banking sector stand? Do you think this is another area of focus and development for the role of internal audit?
Thanks for the question, and I think it's clear now that AI is there. I mean, when we look at it, I mean, from the ECB side, I think 85% around of banks, I mean, use AI based on our stock takes. And I think it presents both risk and opportunities. Of course, as opportunities, I think it can simplify and help to increase efficiency and effectiveness in terms of customer interaction, I mean, fraud detection, also reputational risk of banks. So there are really a lot of opportunities, and we see it's overall used quite a lot by institutions. But on the other hand, it also comes with risks. I mean, risks of data quality, of course, of model explainability, cyber vulnerabilities that are also around, and of course the risk related to the model, the algorithmic bias that you mentioned. And I think the same goes also for Gen AI, that it has a huge potential, but on the other hand, it can lead to hallucination and model risks that needs to be mitigated. So I think in this context, I agree with you, it's a key area of focus for the internal audit function. I mean, you spoke about the different managerial models. Yes, I think this is an area where audit should look at, but I would even broaden it to the overall governance of the AI. on who is accountable at the end in the bank when AI is used. I mean, in case of mistakes, because I mean, we all know for having tested it, I mean, either for work or for personal reasons, that I mean, there are a lot of mistakes still there, and I think audit has a role to play there to make sure that the activities that are done within the bank when using AI are really done in a controlled manner, that staff also knows how to use this. So I think that's really a key element there. And the last element I would like to add is also the fact that AI can benefit internal audit itself. I mean, in the same way as we are developing our subtext strategy as supervisors, but here also I think when processes, tools are used, I mean, they need to be done in a controlled way, I would say.
Yes, thank you. It would be very interesting to understand how is the situation about internal audit and the capability to use artificial intelligence in the real world. I leave the floor to Maria for the second part of our session.
Thank you, Claudio, and thank you, Katia, for those insights. And I think I understand better now that you too are also connecting the dots across your organization and making sure how we all fit in for a better, stronger governance. Let's move to the second part of our time with the ECB today, namely in regards to the update on the initiatives that are happening there, governance and risk culture, as well as the IMAS platform, which we're really keen on hearing about. Florian, would you please share with us some insights on what you've been working on?
Thanks a lot, Marianne. I'm happy to share a few insights related to the SREP reform, which is one major initiative that we have started developing at the ECB to make the SREP process more efficient and effective. And I think it has also implication on the internal audit function that we're happy to discuss with you. Thanks a lot for showing the slides. I think I can move to the next one exactly. So in 2022, so basically 7 years after the SSM start, it was decided to launch a review done by a panel of independent experts on the SREP to look at what is working and what can be improved. I mean, this group delivered a report in April 2023, which highlighted really the fact that over the past years, the SREP allowed to have a better level playing field and a better monitoring of the risk and a better management of the risk by the banks. But on the other hand, it pointed out also a couple of areas for improvement when it comes to the efficiency and effectiveness of the process. And that's why, I mean, now we are 2 years after the start of the implementation of the reform. We have designed really a complete program with 6 main areas of focus to have faster decisions, to have a better use also of supervisory judgment, and also a new methodology on the P2R, which is about to be implemented for next year. So I think we can move to the next slide. Yes. Can we go back to the... Yes, very good. So the SREP reform has 6 major components, and I will tell you where we stand also on those. I mean, the first one is to have more risk-based assessments. And for that, I mean, we have implemented in the ECB a risk tolerance framework as well as a multi-year approach of the SREP, which helps supervisors to prioritize better the type of risks that they assess every year. I mean, I think it's a little bit like your audit cycle, if I may take the comparison, the audit cycle and the audit universe. It does not mean that we do less supervision, but it means that we try to prioritize more, and especially for smaller supervisory teams where the risks are, and do deeper assessments there. Then the second area is a better integration of supervisory activities. So you may know that we have different supervisory activities that we perform between on-site inspections, thematic review, which are horizontal exercises, and deep dives done by the GSTs. And the idea is that all these activities should fit into the SREP, but for that we should be more consistent in the way, I mean, these activities are done, avoid also some overlaps between them, which is a concern that we have heard also several times from the industry. And that's why, I mean, we have now, for instance, a horizontal planning activity, I mean, between on-site and horizontal initiatives that feed into the GST supervisory plan. The third one is very important, so about the usage of the full supervisory toolkit. Here, the idea, again, is that we should be more risk-based. So we have now a new approach, which I will explain a bit later, and Katia alluded to it earlier, regarding the follow-up of findings and measures, where we tend to prioritize these high-impact findings and measures. But I would say more generally, there is also the ambition to be even more intrusive into critical areas that have not been progressing well over the past years. I mean, there is often, and I guess as internal auditors, you sometimes have this also, a backlog of open findings and measures, and some of them are very important, and we want to prioritize the focus even more on them and be more intrusive with them. In terms of enhancing communications on the fourth point, here we are trying to shorten the SREP cycle so that banks can receive decisions earlier. And we also changed this year the format of the SREP decisions. I mean, maybe you saw this if you received it last week or also this week, that there is now a key summary which is shorter than before, and the aim is really to have a decision which is a bit more user-friendly to read as compared to earlier, where the key messages are really well explained so that the banks know where exactly to move and what is expected. Then making methodologies more stable is the fifth area. I mean, of course, it's something for us as supervisors that helps also to reduce some cost of changes, but I think it has also an impact of banks because, I mean, if we keep methodologies more stable, then we don't need to re-explain too often the different changes there. So that's the fifth point. And then the sixth one is the one we referred to earlier on the better use of our IT system. We have now the IMAS portal, which I think has been enhanced. And in general, we'll try also to develop more subtech tools to be more efficient and effective in our supervision. Let me now move quickly to two initiatives which try to foster more risk-based supervision. I mean, the first one is the tiered approach. Is this idea to prioritize as supervisors the follow-up of findings and measures on the most severe ones, so meaning F3 and F4. I think traditionally we as supervisors have been sending you, I mean, different recommendations, and then we have been asking for all the evidence to be submitted, whatever the rating of the findings or measures were. I think in the new approach, GSTs will focus more on F3 and F4. And on F1 and F2, what will happen, and I think this started happening, is that banks receive now a standardized measure, which is a reminder to comply or a reminder to address for internal models. And the banks need, of course, to still address the issue and close it, but ECB will not proactively request for the evidence, so the banks just need to keep the evidence, and then they may be asked, of course, from time to time by the GSTs, who may also do from time to time checks to make sure that the issue has been properly addressed. So I think in terms of benefits, the idea is really to streamline resources, both from bank side and supervisor, and the idea is to focus more on these F3 and F4 findings that are more critical, and on which, in case they are not properly remediated, the ECB would also use, I mean, what we call its escalation ladder. And I think this connects with the next slide and the objective of the SREP reform to focus on effective escalation. I think here the intention is really that we as supervisors would be ready to use the full spectrum of supervisory tools that we have in case critical findings have not been addressed properly. I mean, you see here the escalation ladder that usually, I mean, starts always with a dialogue, with a moral suasion, so that's something that is done in all cases. Then, I mean, we have also forms of non-binding recommendations, like when you receive an operational act, for instance, but progressively we could go to more binding forms also of decisions in terms of supervisory measures, or, I mean, there are also very intrusive and powerful tools that can be used from time to time in really severe cases of non-remediation, like business restriction or changes in governance structures. So I think this leads us to the end of this short update on the SREP reform, so which aims to enhance supervisory effectiveness and efficiency. One important message is that this SREP reform does not mean that we do less supervision. It's not because we assess less modules or that we have less findings and measures at the end that less work is done, but the idea is really to be more risk-based and to continue delivering on our mandate to keep banks safe and sound. We are now in the second year of implementation and will continue, I think, providing updates and different types of communication on how the reform goes. Thanks a lot.
we were hoping for that light touch, but of course, supervision has supported us in our governance processes across the whole banking system in Europe. I know that the SREP has already been released, and that's one of the deployment. How will you deploy these, and how will you measure them? Because we're all about audit and we're all about measuring. So deployment, I think earlier Katja said, monitor it, measure it, and implement it. So how will you measure this own development process?
Thanks for the question. I think it is a good one. Of course, it's a big change for us as SSM to have launched this initiative, and it requires a lot of onboarding from the ECB and also from NCAs, which are part of the SSM. It's also a cultural change. So we have also launched, together with this initiative, a culture program to make sure that we have also a common supervisory mindset in the SSM with a culture to be able to be more risk-based, which means also to be able to deprioritize some things. And for instance, in the multi-year approach, supervisors need to be empowered to be able to focus on the most critical risk, and then it means not be able some years also to assess the full spectrum of risk if there are less material for the bank. So I think that's how we try to implement and deploy this reform. We have also indicators that we use to measure the progress, in relation to these 6 work streams. I think you may have seen some of them in external communications. When it comes to the multi-year approach, we would look at the number of modules assessed by our supervisors. When it comes to the tiered approach, we look at the number of findings and measures, but also looking at their ratings. And here, we see indeed a decrease in F1 and F2 and a slight increase in F3 and F4. So these are types of indicators that we look at. And when it comes to the SREP cycle, of course, we measure the length of the cycle with the aim to reduce it.
So we're up against the same kind of challenges then. So thank you for those insights, Florian. Before we deep dive further into this, I wanted to not miss the opportunity to speak with Katja in regards to the guidance on governance and risk culture. The long-awaited document that we got a glimpse of last summer, I understand is due in the next couple of weeks for final release. And looking at the fact that 85% of the banks across Europe have a SREP score of 3 or 4 for the pillar of governance. Is this going to be a tool that's going to support the ECB and how to better assess governance and improve it?
Thank you for this question, which was also the most expected one, of course. And so the guide will be published, maybe not in a couple of weeks. Maybe we still need a bit of more time, but the guide will be published because it has a strong meaning for all of us. So, as you say, first of all, the key added value of the governance guide is for us the good practices, the list of good practices, because they can really help the banks themselves to have more examples, to inspiration for practices to be put in place, to also inspire the dialogue among yourselves. And so the idea is to really making this part more prominent in the guide. And I would invite you to really read the speech of our vice chair, Frank Anderson. He made this speech a few weeks ago in Florence, where he explained really the use and the purpose, the goal of all the ECB guides and expectations, where he made exactly this point, the point of the good practices and the best practices. So we want to really expand this part. Secondly, indeed, for us, the governance guide especially is important because it tries to put together and give an holistic view of all the regulation and the level 1, level 2 text, and to put them in a consistent framework. And finally, we look indeed at the governance guide as a tool a dialogue tool for banks and the supervisor, exactly for this, to fill, the room that you have for interpretation in a sector where you have more principle-based type of regulation. And so, if we manage to fill this gap with mutual understanding, then it can also, of course, help and improve even the assessment made by the JSTs. So for these 3 key reasons, we do really are fully committed to publish the governance guide, but it takes a bit of time, even because we need to stay, and we have always been, but we have to continue stay aligned with the EBA guidelines. And you know that the EBA has also started its own review of the guidelines. So we do really need to go in parallel and be respectful of the responsibilities of all the stakeholders in the European framework. We need to address your comments, the comments of the industry, which were very helpful, and we are taking them one by one. And finally, the publication is going in parallel with the wave and the call also from your CEO for simplification of the regulatory framework. And so we have to be sure that the new guide is also fit for the new environment.
I think you found great partners in us in making sure that we fulfill that expectation as well, because that is our daily job in juggling all of those priorities at the same time. Let's move back into the SREP, and understanding that the high-level task force now has completed their exercise, and the measures are already out. Can you see some tangible outcome already from these reforms, and more specifically on the SREP format? Has that improved the monitoring of the banks in this short time since the summer that it's been out, I understand?
No, thanks a lot for your question, which is important. And indeed, I think the EBA published its report on simplification. Within the ECB, there is also a high-level task force initiative which has been launched, with different work streams in order to foster more simplification of supervision. There will be a report published, in the next weeks, months. The exact date is not completely known yet, but I think it covers some of the key areas that you mentioned, in terms of decision-making, internal models, capital, reporting, on-site inspections, also to make sure that there is a good alignment or a better alignment maybe within the SSM, that we all speak one voice. So there will be a couple of communications in this area, and we hope that these initiatives can lead to a bit more simplicity and effectiveness in supervision without compromising resilience, which is really the balance that we need to address. How the SREP reform fits into this? Actually, the SREP reform had started a bit earlier, so now 2 years ago. And to reply to your question, yes, we start seeing some benefits. And we had an industry dialogue, I think 1 month ago, also with bank representative, and this is also a feedback that we heard. First, on the SREP cycle, now the decisions were sent earlier this year. I think earlier by 5 or 6 weeks as compared to the previous cycles. Thanks to the collective effort made by the different parties, and I hope this helps also banks to be a bit more prepared to address the requirements that are mentioned in the SREP decision. So I think that's one example of outcome. Then the supervisory examination plans, which summarize the GST activities for the upcoming year, will be shared also by the end of the year, which is earlier as compared to previous cycles. And if I look also at findings and measures, because this was also in the presentation, the tiered approach, here I have a couple of figures that the number of SREP qualitative measures has decreased from 700 in 2021 to now less than 400 in 2025. Meaning, and that's what I was referring earlier, that there are less severe findings and maybe more focus on more severe findings. And we hope that this is a trend that continues, and we'll monitor this and of course report back to you also on this.
So that would be, we're improving overall, perhaps. So that's a good message as well. I'll take that as an input for my next question in regards to the more practical approach and the IMAS platform. That's something that's definitely been released earlier this summer and something that we're all learning how to work with, and the emails that are popping up in regards to making sure that we get our actions done. How have you, are all of the actions uploaded into the IMAS platform, regardless of the tool, OSIs, horizontal reviews, deep dives, thematic reviews, and I go on in the tool. So everything will now go up into the IMAS platform?
In a nutshell, yes, by the end of the year. So I think as of last month, 85% of all measures were included in IMAS for all banks across the SSM. So maybe for your banks it's more, for some other it's less. But I think indeed the intention is to have really a platform which fosters transparency between banks and supervisors, I mean between the bank and the GST, on the situation of measures of a bank and on how the measures has been addressed. So this is really the intention, to have here all findings and measures there.
So that'll be useful for all of us, for sure. Do you expect some kind of trending analysis coming out of that for beyond each of the banks, but across the banks? And how will that tool be utilized for, you know, we heard of the CEOs earlier about future, you know, foresight, and insight, foresight, not only looking back, but looking forward. Is that something that the IMAS platform you envisage doing for the SSM as well?
So the IMAS portal is the face of the portal that the bank can see. And then behind there is the tool which we call IMAS, where, I mean, findings and measures are already reported there. And I think we already, to some extent, communicate trends on findings and measures. If you look at the outcome of the previous SREP, for instance, there is a page on the ECB Banking Supervision website which provides trends analysis on findings and measures per risk type, for instance, where you can see the evolution over time. We also communicate, I mean, regularly in different speeches or external communication, key areas of attention that we have in relation to the risk that Katia mentioned earlier. And I think this will continue. But coming back more specifically to your question, I think it will not change dramatically because of the IMAS portal. I mean, the portal aims really to increase transparency between banks and supervisors on bank-specific findings and measures.
Okay. Any tips for us as auditors on the two-tiered approach now, looking at the F1s and F2s, which will have a 12-month period to comply? Anything that you would share with us for better handling of that? Because that's not going to be in the platform, I understand. So what do you expect from us as auditors on that?
I mean, I think it's a good question. And I think in principle, all findings and measures should be in IMAS also, and the IMAS portal, whatever the rating may be. So, and we expect banks to address all of them. So, I mean, the best way to have F1 and F2 outside of IMAS, I would say, is to address them. But having said that, and more seriously, I think when it comes to the role of audits in the follow-up of recommendations, and I think we had discussed this last year, this is a key area of focus, and we expect, I mean, the internal audit function, when they build their audit plan, also to consider, I mean, what comes from the supervisory authorities, I mean, as one of the input. I know you have many stakeholders also to consult, but we would expect this to be part of the follow-up and of the audit plan. Now, indeed, I mean, the tiered approach introduced this differentiation between F3, F4, and F1, F2. Of course, in some cases, we have GSTs asking comfort from the internal audit that F3 and F4 are well addressed. And this is done on a case by case, and I think this is going to continue. For F1 and F2, where, I mean, we will not proactively request the submission for evidence, I think here the internal audit has also an important role to play, especially in reviewing the process that the bank will implement on this F1 and F2. And I mean, we have not seen, I think this is a bit too early to say what we have observed on this F1 and F2, but I would see it personally as a good practice that internal audit, I mean, does a review of this process to make sure that it helps to mitigate the issues also.
For sure, I probably speak for all of us in that the IMAS platform mirrors our own internal tools to one by one follow up and validate and keep that documentation, whether it's in our own platforms or in the IMAS platform.
If I may add one consideration on this point also, what we are trying to do with my team is trying to use the tools behind IMAS for an horizontal also analysis of the measures in order to try to find maybe some common root causes for the findings, and so exploring then with the JST the way to bundle the measures, the findings and the measures, to find the root causes and then to work on these root causes more than finding by findings or measures by measures. Let's see if we will be able to make a step forward.
I trust you will, and we have you have our support in making sure that the governance, risk management, and controls are continuously improved across our banks, and that we uphold the concerns and the implementations that we've done so far across the banking system in the last 10 years. So thank you to both of you for your time today. I think we're all running into the end of our session in regards to governance and platforms and expectations, if you wish. Claudia, over back to you.
Yes, we have a couple of minutes for one more question, Katia, if you agree. I noticed that in your slides, there is an issue related to internal audit and related to the staff, the number, and the skills, I would say. So in terms of skills, first of all, I think that we need to have a clear strategy as head of internal audit about the needs of skills, of quantity and quality of skills that we have. And in my personal view, we have to invest on data scientists, quantitative, probably in many cases also on ICT and cyber. What's your idea about, in this regard, your suggestions? Looking at the internal audit around Europe.
The idea of the mapping is, for me, for sure, the starting point. The mapping the business needs with the existing skills, and then the strategies to match these gaps in terms of profiles and tools. The need for this type of competencies and profiles, IT, data scientists, and so on, is, I would say, very common, but across all the sectors and the industry. There is really a kind of race for this type of competencies, and this is one of the most clear outcome of all our analysis on digitalization and strategies. And so actually we all compete for the same type of resources. So a way to have this type of skill in the organization is really a common pattern. But with a caveat on my side, based on our own experience, these kind of competencies, I think, are more valuable if always matched with somebody who knows from the inside the processes and the dynamics of the internal environment of the processes and know basically the business and the organizational processes, because they go really hand in hand. Organizational knowledge, impact, and AI tool are really interlinked, and they cannot go one without the other.
Yes, so to join the business auditor together with the data scientist, the quantitative, and so on. And possibly to upskill the business auditor's capability in being more able to use sophisticated data and to be able to check the managerial models and something like this. Okay, so we are arrived at the end. We have touched on a lot of topics, I would say. I would summarize that, first of all, is very important about the emerging risks. role of our role in supporting the bank in assessing the non-financial risks that are very often the new emerging risks. In this regard, ECB has focused the importance of being able to start from the RAF, risk appetite framework, and our role in assessing in an independent way and in the ways that Ms. Mastrodomenico explained, the coherence of the RAF with regard to these new emerging risks. At the same time, I think that all of us appreciate a lot the target of ECB to simplify the rules. I think that the IMAS platform will be a way to be more transparent, more effective, the relationship and the communication between the supervisor and the banks. And the last point that I wrote down is about all the challenges that we have to face. First of all, it's very important to be very well focused on our role in following up forever, because we add the value not only if we are able to identifying the weaknesses, but we add the value if then we are able to contribute to the solution of these findings, as well as the findings from ECB. And about the last question, it's very important to have a clear strategy in the evolution of our staff skills. Being very able not to concentrate only on the new techniques, but being able to join the business auditor together with the new competences. Well, we have reached the end of our session. Maria, myself, and the entire ECIIA Banking Committee would like to thank Katia and Florian for their contributions. And at this point, the program includes a 10-minute break, so we will resume at 3:45.
Welcome back, everyone, to the ECIIA 2025 Banking Forum. I hope everyone managed to get a quick break there for 10 minutes after that fabulous session that we just had with our ECB colleagues. The next session that we're going to move on to is around future-proofing the profession in a rapidly changing world, but particularly with our Audit Committee chairs in mind. I'm joined by Anna Reich, who's my colleague on the ECIIA. I am Jonathan Wilson, the ECIIA representative for the UK and Ireland, and I'm currently the Chief Auditor for Barclays Europe. Anna is Chief Auditor for Helleberg Group here and is fabulously hosting this event in the building here in Frankfurt. I'd like to introduce our two panelists. Virginie Legrange first. Virginie is a very experienced non-executive director, chair of ILA in Luxembourg and a number of other Luxembourg-based entities, Mutual Liberty, Aviva Partners, CIBC Capital, after a very successful executive career, including Chief Auditor, Chief Financial Officer, Chief Administration Officer, Chief Risk Officer. I'm not sure where I stop with that list. But also Barbara Lambert also joins us. Again, a very experienced Audit Committee Chair, Board Risk Committee member, currently the Audit Committee Chair of Deutsche Börse Group, and also UBS in Switzerland, again having completed a very successful executive career as, again, Chief Auditor, Chief Risk Officer, all of the usual suspects. So we're very, very privileged to have both of you. Thank you both very, very much for agreeing to participate in our session. And I'm just going to hand over to Anna to take us through the first couple of questions.
Thank you, Jonathan. So good afternoon, everybody. It's really a pleasure to have you here, especially Virginie and Barbara, to see your expectation and your views on our internal audit functions. So, Barbara, Virginie, we have a really easy question to start with. What are your expectations on the internal audit function profession for the next 10 years? Do you see any new role for internal audit, any strategical role for the internal audit profession, as we heard from our CEOs in the keynotes?
Okay, I can start, and Barbara, you can then jump in whenever you want. For me, what I see, and it still has started somehow, is that we have internal audit playing more and more a strategic partner role for the audit committee. And what I mean with that is really not only providing an insurance view, but providing more an advisory view, more a forward-looking view. I know that there is a lot of discussion on that, having advisory roles as internal auditor, but nevertheless, I think this is something that will come more and more in the future, because we expect the chief internal auditor, but as well the auditors in general, to be more involved in the strategy and having more this forward-looking role. So this is something that I really think will come in the future years, and it is already coming. What I see also is that there will be more integration of technology in the internal audit function in the future, more use of analytics, of AI, of course, continuous monitoring. So this is also something that is changing currently. You will be more and more tech focus and have other skills, but that we will discuss in the next point as well. But I think this is also a change of the role of the internal auditor. There is also this view having more, continuous monitoring, not only performing an audit plan, but really being more a real-time auditor, helping the audit committee to work more proactively, changing your audit plan faster, adapting. I see that there is the creation, I would not call it a fourth line of defense, but more and more a third line plus line of defense, using more continuous monitoring, automated tool, AI, to perform a more agile auditing in the future, being faster and being more a partner, not a real-time, but almost real-time partner for the audit committee. And then, of course, you have the focus on ESG and sustainability that is there, that will not move away. It might be on pause more or less, but I think it's a slow pause, and this will continue. So it's not only providing insurance on figures, but it's also all the non-financial reporting, which will continue to be a major part of what internal audit will have to do in the future. So these are the major changes I see in the future. Maybe also the last point being more a partner in doing ethical oversight over the organization, ensuring that the culture that the organization has in place is the right one, not only in terms of risk culture, but generally, is the culture of the company the right culture? Is it the right tone from the top? Do we have the right behaviors in the company? So this is also something that is changing. I'm not saying it's easy to audit. It's something that is, all the non-financial part is always very more difficult, or all the non-really strictly control side is more difficult to audit, but this is something that the audit committee wants to see as well.
I fully agree with you, Virginie. I think the expectations the audit committee chair have, but also the regulators have towards the internal audit are clearly increasing. I think it has been a trend I've seen since a couple of years, but I would say it has been accelerated by the geopolitical risks we have seen over the last couple of years and months, and also by the impacts of certain risk and the disruptions on companies. If I think about cybersecurity companies who were not able to operate for a couple of days and months. So there is this, I would say, management needs everybody who is able to give an insight to help them really to manage these risks. And I'm a firm believer that I think probably one of the only function who has a global overview on all business lines, on all geographical areas, on the front to back processes is internal audit. So why would management, and especially the board and the audit committee chairs, not be able to count on the internal audit function? So I would say that internal audit will gain, in fact, and it's a unique chance that internal audit will really get the seat at the table and to contribute with added value and into strategic discussions. And of course, what we have also heard before, it's the shift from the traditional risk, the traditional financial risks, where internal audit can have can do their missions, to really the non-financial risks, which become much more important. And the whole topic about DORA operational resilience, I think internal audit has an important role to play here.
So thank you for that insights. That is really great to hear from you, from a supervisory perspective, from a board perspective. So, and what I hear is you see a more ethical role, strategic role for internal audit. Do you see any need for a change of the 3 lines model? So, Barbara, maybe we start with you.
Yes, I think, first, I don't think the 3 lines of defense model is dead, okay? I think we will survive. It should survive, but I would say it will evolve, and we are going from a more defense model in a proactive offensive and a proactive risk awareness model. And this means that this has something to do that since the world is evolving so quickly, so rapidly, and in order to keep up with the pace, you need to be able to react, and you will see more collaboration and also more integration between the 3 lines of defense. Even if I believe that you will certainly see them more, or should see them more, between the first and the second line. Because to me, it is absolutely key. This is at least my expectation as the chair of the audit committee and a board member, that internal audit, despite integration and collaboration, remains absolutely independent. I think we need this independence, and going forward, I think we should pay attention how the roles and the responsibilities are defined, because before starting to get, breaking up the silos and things getting blurred, you still need to make sure that nothing falls in between and everybody knows what they do. But I think it's more a bit the question of, in the end, if you have to defend the institution, it doesn't matter if it's the first, the second, or the third line who goes first, because we all are in the same boat and need to protect the institution.
No, I fully agree as well with Barbara. I think that the collaboration between the 3 lines of defense will increase, but that's something I see already now happening. But nevertheless, I think it's important that the 3rd line remains, I'm always saying, the gatekeeper, This is very important for the organization and for me as well as chair of an audit committee, that I can really rely on a strong third line of defense. But the cooperation is there. I already see that usually the risk universe between risk compliance and internal audit is the same. Which makes sense at the end, because the risk universe for same entity should be the same. They work with that. Usually when internal audit is planning an audit in one specific area in 1 year, the second line is doing less, or vice versa. So this is already happening, but I think this will even be stronger in the future. And as well, as I mentioned, with the pace of all this changing, I think it's important that people work together. But I agree that the challenge will be for internal auditor to remain independent, because that's what we expect from them. And it's also the role of the audit committee to make sure that we can support them in being independent in the future.
Mm-hmm. Thank you. So what I hear there is that independence for internal audit stays really important. And if there are any changes in the three lines model, the really important part for us in internal audit is to stay independent. Looking at other opportunities and maybe obstacles for our internal audit profession, what do you see in particular for topics like digitalization, already known risks like AI, cybersecurity, and ESG, but also to the risks not yet known, to the emerging risks? Do you see there any obstacles and opportunities for our internal audit functions? Virginie, maybe we start with you.
Yeah, I think the major obstacle that we have for the time being is really the shortage of resources and the shortage of skills. Making sure that the internal auditors that are hired now have more a technical or techie background, as I mentioned before, being strong in digitalization, in cybersecurity, understanding AI, understanding data analytics. I see some internal audit functions hiring more and more people doing data analytics, because that's coming and that's the future. I see also more and more audits performed with the help of AI to be faster, to focus on probably issues that you would not see without the help of AI. So having the right skills in your internal audit team will be key for the future. We speak about ESG. I think it's also the same. Everyone thinks they have a broad understanding of ESG, but internal audit needs to have more than just a broader understanding of ESG. You need to understand what are the different risks in ESG, what are the climate risks, what are the coming risks, how is the reporting done, all the non-financial reporting, do we have the right data, do we have the right processes in place? So this is really something where I think we are still not there in most organizations. I mentioned data, so making sure that we understand the data that is compiled in the different organizations, the data crunching, as I'm saying, making sure that we have the right systems in place to help as well internal audit on that data analytics. And for me, internal audit needs as well to accommodate the very rapid rhythm of changes. So the pace is very intense, and we need to continue to make sure that our internal auditors are still skilled, are doing some continuous learning, because that's also a very rapid changing environment. And that, as I mentioned, the profiles that we have in place in the future are the right ones for the organization. If we want to continue to have a strong internal audit function, we need to have this forward-looking proactive view and not just continuing having the traditional internal auditors that we had in the past. For the time being, sometimes consulting companies are helping internal audit for these more technical things, But I think that is something that you need to have in your organization as well in the future in order to better support as well the audit committee on their requests and to be faster.
If I may add, for me, there's another obstacle, and especially regulators should pay attention to that. I think there are more and more expectations on internal audit, and there's also an increased liability and responsibility of internal audit, especially, of course, of the head of internal audit. And I think you should be aware that if you take more risks, and we heard before that, yes, we are in a risk-taking industry, but risk-taking comes also with reward. So to me, and again, the motivation, I think most of internal auditors, and me being also an internal auditor before, I think we are animated by passion and what we do, but you should also make sure that the remuneration is truly aligned with the responsibility and the expectation you have towards internal audit. And I think the company needs to make sure that the positioning of the internal audit function is really at the has a very high value, and that it is seen as a possible stepstone to for a future C-suite career opportunity. I think that's very, very important if you want to talk eye to eye to the C level.
Oh, thank you on that perspective. That is really important to think about the quick changes we have in the industry and also about the skills we need in internal audit. And I mean, there are the technical skills for auditing, but there are also soft skills, like you mentioned, Barbara. What else would you advise us in internal audit to reflect on upskilling? What kind of skills are really important from your view as audit committee chairs? So, Barbara, can we start with you?
I mean, Virginie has touched on this. You have to be technical savvy. You don't need, especially the head doesn't need to be an expert in AI, but you have to understand the risk and opportunities for a company, and you have to understand how to leverage AI to gain in efficiency, to broaden the scope of the audit, to go from sample testing to full coverage like this. Then I would say on the soft skills side, and there also I believe in the importance of emotional intelligence. I think it is absolutely necessary that internal audit will be even more able to build up, trustful relationships, communication skills, because it's not always the nice things you have to you will communicate. But I think there needs to be an investment in the soft skills part for sure. And I think at a certain point, an institution also needs to be realistic about what internal audit can do or not. And we have seen we need more and more experts. And the small and medium-sized institutions, they can't be any longer, they can't have the ESG expert, the cyber expert, the AI expert, the data privacy expert, and so on. So I think you need to invest also in co-sourcing with other companies, and maybe at a certain point of time, you need to see whether you will not outsource, in fact, in internal audit if you're getting too small.
Yeah. Maybe what I will add as well to what you already said, Barbara, is that for me, as internal auditor, you need to have as well this strategic thinking to be really part of the organization, to support and to also understanding the upcoming risk for the organization, to adapt your audit plan to the strategy, to make sure that the processes, the systems that we have are also in line with the strategy. So this is something I would like to have as well from my internal auditors and the internal auditor executive. The communication skills, that's for sure. I think that's and that will be more and more in the future years, because I think that internal audit will have to give more and more persuasive messages to the audit committee. As I said, the path of change is growing, and I think here the expectations in terms of communications are very important. I think as well, as I mentioned before, the internal audit will have more and more experience or skills in everything which relates to ethical behaviors. So understanding the cultural issues, the geopolitical issues, and not only the standard audit risk that we had in the past. Probably we will have, as internal auditor, to adapt as well our working methodology to be more flexible, to adapt to emerging risks, to be able to adapt the audit plan faster, and to be able to adapt to these fast-changing environments. So this is something, that's why I mentioned before, continuous monitoring. I think this is something that is really key if we want to grasp all the risks that are changing all the time. Even if you look in the cyber risk environment, you have other cyber threats every 2 days. The environment is changing very fast, and for that we need as well to have audit methodology that adapt fast and people that have the right mindset. So I think that's something that will be key in the future. And I agree with you, Barbara. Indeed, if your organization is too small to have the right skills in terms of of cyber, AI, data, etc., you need to find them outside, and probably then to outsource or to co-source, and to learn as well when you co-source or when you outsource. I think that's important as well.
Thanks for that. Look, one of the key relationships that we certainly have as chief auditors, I know that you would have as audit committee chairs, is that relationship between the chief auditor and the audit committee chair, and building up trust in that relationship, I think is really, really important. I'm just interested, maybe starting with you, Barbara, how do you see that relationship? What makes it work? Have you any tips for us as chief auditors and participants in the audit profession?
Well, I think, I need the head of internal audit as much, hopefully, as he needs me. So to me, it should be, a trustful, respectful relationship. And if the head of internal audit understands that, what I would believe one of the main role and tasks of me is to support him, to stand by him, to make sure that he or she has the impact he wants to make. And I offer to challenge. And this is, for example, during pre-preparation meetings before an audit committee, where I would give advice, where I believe he or she should focus, where questions should be anticipated, how to present, in the sense that at one point you have the right helicopter view, but on the other side you're also giving sufficient details. So to me, the audit committee chair can really be, a sparring partner, listening, support, mentor, and challenge. And I give as much, and I have, as you said in the beginning, myself, but also Virginie, I think we have seen a lot in various functions. We have a lot of experience. And I think we have arrived at the stage of our life where we also want to give back and make sure that the younger generation will also have the adequate impact.
No, I fully agree with that. I think the trust relationship is key. I would hate to have just, a meeting with the chief internal auditor just before the audit committee. Usually, for me, it's important to have regular meeting. As I'm saying, I hate bad surprises, so I prefer knowing them when they occur. So I want to have this regular contact with the chief internal auditor. I think as well that the chair of the audit committee has a coaching role. We are there also to support. As you mentioned, Barbara, I think we already saw a lot in our professional life, and we can help. We were in the same functions before, so I think that's also something that the head of internal audit can use to ask us for advice and to give the right messages. But for me, trust is key. I think you cannot work with the audit committee and with the head of internal audit if you don't have that relationship. But it goes both ways. I mean, it's for the chief audit executive and for us. So really, that's something, trust and regular communication, not waiting for the last minute to call us and to come with your issues or concerns or whatever.
Look, I mean, thank you very much for that. Look, time is unfortunately beating us. We could certainly spend, I'm sure, another 30 or 40 minutes with various other questions. Very interesting that we managed to get through 30 minutes. We pretty much exclusively talked about non-financial risks. I don't think there was any mention of treasury, capital, liquidity, credit, those sorts of things. So I guess you can see the importance of that non-financial risk element to our audit plans, whether that's resilience, whether it's cyber security, whether it's ESG risks. It's really, really important that we've got a very thoughtful and carefully thought out approach to dealing with that in the audit plan. The other thing, and the phrase that has been coined in the past very much has been the auditor of the future. It's actually a term that we're trying to ban in our organization because we feel actually that auditor is now the auditor of today, and being digitally enabled, understanding and having an ability to write code, to deal with big data, and now how we build use cases to provide better assurance, wider assurance through the use of AI is really vitally important. So look, the final thing is just to thank both of you very, very much. Thank Anna as well as my co-facilitator. And that's been really insightful. Thank you. The next session that we'll have, which is coming right up, is where we can actually see some best practice from other industries and how we can learn from that. Thank you.
Thank you. Bye.
Hello, everyone. Very happy to play together with Paco this last and more masculine, I have to say, panel dedicated to the way audit leaders from other sectors adapt to the opportunities and challenges that the evolution of technology, regulation, and risk environment brings to our responsibility as auditors. I am Alexandre Mema, Head of Audit and General Inspector of Société Générale and French member of the Banking Committee of the ECIIA. And I will moderate this panel together with Francisco Martinez Garcia, Paco, for his friends, who is the Chief Audit Executive at Bankinter, one of the Spain's most innovative financial institutions in Spain, and the representative of Spain in the Banking Committee of the ECIIA. We will in particular focus on three topics. AI, of course, and the way it modifies the practice of audit and the risk of the activities that we assess. Second topic, reliance with the or cooperation with the other control functions that are contributing to give assurance to the top management and board members on the sustainability of the business strategy. And third, challenges you meet in preparing your teams to the evolution of our practices and environment. But before entering into the discussion, allow me to introduce our guest. Beginning by Marco. So Marco Rosenberg is a Senior Vice President and Chief Audit Officer at Booking Holdings, a global leader in online travel and related services, and the parent company of Booking.com, Priceline, and other major platforms. He has held this position since October 2016, leading the group's internal audit function across multiple geographies and business units. Prior to joining Booking Holdings, Marco spent nearly a decade at the Heineken company, where he held several leadership roles, including Director of Global Audit Europe and IT. Marco began his career at PricewaterhouseCoopers as Senior Manager, specializing in IT audit for large multinational clients. Marco also served as a board member of ECIIA Netherlands from 2022 to 2024, contributing to the advancement of the internal audit profession in the Netherlands. Marco, I am very happy that you can share with our attendants your so strong and diverse vision on audit practices and the way it will evolve. Second guest for this afternoon, Georg Klein. So Georg is the head of assurance and chief auditor at Siemens AG, sagt man in Deutsch. A global leader in industrial technology, automation, and digitalization. In this role, he oversees the independent and objective assurance regarding the integrity of financial reporting, the effectiveness of risk management and internal control systems, and adherence to Siemens compliance policy. Under Georg's leadership, the audit function covers a broad spectrum of assurance activities, including operational and financial audit, compliance audit, digitalization and IT audit, and cybersecurity audit. Georg joined Siemens in 1999 and has held a wide range of leadership positions across finance, risk, and business management. In addition to his role at Siemens, Georg serves as chairman of the board of directors of the German Institute for Internal Auditors, and is a member of the working group for external and internal corporate governance, contributing to the advancement of governance standards and best practices in the audit profession. Georg, thank you for being with us today. So let's begin our session by my first question regarding AI. How AI did change your work so far? What are the most interesting initiatives that you have taken in that respect? And what are the most important challenges you face in developing AI practices within your teams? Perhaps, Marco, you can begin if you wish.
Thank you. Thank you for the introduction and also for the invitation to join the session today. I think it's a very broad question. We can probably spend all the available time to discuss that one question. I think generally I look at it in two different ways. On the one hand, of course, AI or Gen AI, I think we should be more specific probably, because we've been using AI in the business for a very long time as an online platform. But now specifically Gen AI has become available pretty rapidly for our company. both to improve internal productivity, efficiency, effectiveness, etc. But of course also client-facing on our platform or in customer service in many different areas. So I think the first distinction is between how we can use as internal audit can use artificial intelligence, the various tools that became available. Are we actually becoming more efficient, effective, etc.? I think that's always the question we should ask ourselves. But also the auditable objects have changed quite significantly with the rapid embrace, of course, that we have seen of generative AI. In the many different solutions that we've built for our customers, for the bookers, for the partners, which in our case means the hotel partners. So I would say the technical complexity of our audit job has become quite more complex. I think what we have to realize with Gen AI is that it introduces, I think, a new challenge that we haven't faced before. Mostly the fact that you introduce a bit of a black box into your business environment. If you think about, for instance, SAP systems in the past, you could design, you could configure, then you build, and you could test. And that SAP system would treat every invoice the same, no matter how many you would process through the system. The outcome would always be predictable. So you have a standard to test against. I think what we see now, of course, when you audit AI, that of course does not exist in a similar manner. So you're dependent on external parties that maybe build the large language model or build the Gen AI app that you're using. You don't know the changes to those LLMs, how those are being managed or even tested, if at all. And every time you ask that Gen AI solution a question, or if you ask the same question multiple times, you might get different answers as well. So that's a lot of uncertainty that we as internal audit, and also, by the way, our colleagues of external audit have to deal with. And that's, I think, one of the big questions for the next probably year or so. Can we rely upon that? How do you deal with the external party risk, the third party risk? And do you treat that the same way as you might have done in the past with an SAP? Or even if you have a cloud provider, you could still get assurance from that provider also in the contract. All of that does not exist yet. And of course, it's a very new, very rapidly developing environment. And some of the players, including OpenAI, are not as mature as, of course, a lot of the other business players that we used to audit and rely upon in the past. Let me stop there on the impact on internal audit, our ability to actually audit, provide assurance, provide insights on this new piece of technology that we're now seeing being used very rapidly across the whole company. The other part, of course, is how are we embracing it? How are we using it? And are we, changing and moving fast enough? The answer probably is no. So we got quite a number of new tools available in the last year here at Booking.com, and probably between 5 and 10 new type of tools that could really change how we execute our audit life cycles. Let's say from planning and scoping to execution, interviews, documentation, report writing. And I think for now, what we have said and what we have tried is we said, okay, we make everything available bottom up to everyone. So it's uncoordinated experimentation, as we like to call it. So we engage, and we stimulate and we challenge all the audit team members to make use of the new technology. We gave them a bit more hours, let's say, in the fieldwork phase of the audit to really try and experiment. And I think right about now, we're probably 8 months into it or so. It's probably time to step back and see, okay, what have we learned? What does actually really work well? And start to be a bit more coordinated top down on how we now want to embed some of that new ways of working and the lessons that we've learned, the new practices, into our audit methodology for 2026. Now you cannot run uncontrolled at this type of speed for much longer. It's just not efficient anymore. And so I think we've done a lot of learning, and now it's time to see, okay, what really worked and how will we embed that in our audit methodology. Let me just stop there and also give George a chance to chip in. But this is a bit what we've seen so far on this very interesting topic.
George, the floor is yours.
All right. No, I couldn't agree more with Marco's statements. I think here at Siemens we spent quite a lot of time in order to contemplate of what is exactly the right framework to provide the structure that Marco has alluded to. I think at the beginning it was perfectly fine for all of us to come up with great ideas and maybe experiment a little bit with one or the other use case, how we can, from an internal audit perspective, use artificial intelligence in order to support our audit activities. But then we started to find out, hey, there's a little bit more framework necessary. In our case, we called it the industrialization of our innovation process, to make sure that on the one hand side, we continue to collect the great ideas from our colleagues and also from the auditees of how AI could be leveraged, but on the other side, also provide a true innovation framework to make sure that we prioritize these ideas or those ideas which have the biggest potential or which appear to be the most promising ones. As also from an internal audit department's perspective, we have only finite resources. So we need to prioritize and put our cards onto those beds that we believe have the biggest potential to either scale or to open up new areas with regard to quality or the sample size we are able to digest in that regard. So maybe this might be an element where we have taken a lot of time in order to come up with this kind of an industrialized innovation framework, almost like simple startup companies are doing it, and at the same time making sure that this process is transparent also to your entire audit team, so that they feel encouraged, even though an idea might not be followed through to the final implementation, but definitely are encouraged to come up with the next idea, which might have a better probability of finally being implemented. And maybe just a last thought on this one. Ultimately, I see a lot of potential, like Marco has indicated, that many of the solutions that are being used in our internal audit work are finally being transferred into the second or first line of defense. So many instances, let's put it this way, if a certain methodology or certain algorithm or certain IT supported tool has proven to be, let's say, fruitful in the audit context, why should we wait for an audit to stop by, but hand it over to the first line of defense in a perfect case, and they can integrate this into their day-to-day operations. So this a little bit maybe an add-on to Marco's statements.
Yeah, thank you very much. You're right by saying that on one side, AI capabilities dramatically improve our capacity to move from a process-driven audit to a much more data-driven audit. And you have also explained how GenAI can industrialize, I'll say, a part of the drafting and administrative stack that we are currently making in our audit practices. I would be very happy if you could share with us, two pragmatic examples in your audit function through which, AI has dramatically changed, the way your team is working.
So if I may,
Yes,
I think from my perspective, I think there might be different categories, and maybe there, at least in our case, I believe there might be 4 of them. The first one is to innovate with pride. As I said, let's have the entire team working on these ideas, and what we have developed in that regard is our Assurer. You could call it the co-pilot, an in-house developed co-pilot for the audit function in order, like Marco indicated, have these tools integrated into our audit tool environment and not just using them on a kind of an add-on or outside the regular tool set that we're typically using in order to prepare our audits. So this is the first category, innovate with pride, but making sure that they are integrated into our own environment. The second one is really copy with pride, if I may call it this way. A lot of great ideas, and just think about the prompt libraries that are openly shared amongst companies from one side to the other. I think quite a number of audit departments are facing the same challenge, and why shouldn't we use, let's say, the insights and also the proven prompts that has worked for one company, also maybe for another company, maybe even being further optimized and then handed back to the originator so that the entire community can benefit from them. The third element might be, and sometimes we start to forget about these ones, is to buy with pride. In essence, what we mean by that is we see a lot of also smaller startup companies focusing on a kind of a niche solution, but still command excellent technical expertise. In our case, we are using a so-called document authentication solution in order to see whether evidence being provided to us is really not manipulated or is still in the original way. For sure, you could argue this could also be developed in-house, but in essence, why shouldn't you use the expertise of some smaller technology-driven startups that do have a certain advantage also from a timing perspective and maturity perspective in that regard? And ultimately, the last, and maybe if I may call it the holy grail of internal audit, if you start to use large language models to assess the maturity of other large language models. It's not as easy as it sounds, and I don't want to declare victory by no means that we have found the perfect golden bullet, but it's interesting to see that you can actually use AI to audit AI solutions, or at least to test them. And this, I think, is a very, very compelling and also promising area, which definitely needs to be further explored. With that, over to you, Marco.
Thank you. Yeah. Let me give a few examples of the here and now. How are we using it today? So I think the obvious one is we have one of the AI tools. It's called Glean, which reads all our Google Drives, your email, all the various documents we have available in the company. And so it's almost like you always have a team member who knows everything about the systems we use. You have a team member who knows all about maybe regulatory items or processes in a certain part of the company. So now more or less this tool is actually the expert on everything. And if you are in a meeting and someone mentions the name of a system, you can just ask Glean. You'll get a very good explanation what that system does, who is the owner, etc. If it's a process question or what do we put in our contracts with hotels. So all of a sudden, all of that information is right there on your fingertips. And where you might, in the past, you would have spent hours searching for the right person to answer a question and rely on maybe half information from a number of individuals. So this is the low-hanging fruit, immediately available, immediately a huge improvement and an incredible efficiency gain. The second one, we're now using Microsoft Teams for this conversation, but we're typically on Zoom as a company, and we enabled Zoom AI, which automatically, in meetings, let's say you come in after 5 or 10 minutes, you can catch up what has been said so far. Has my name been mentioned? Did anyone assign me an action? You know how it goes if you're not in a meeting. So that's already great. But then after the meeting, you get an automatic transcript as well that you can share with your meeting participants. You can have action items already being summarized. So again, very low-hanging fruit kind of examples, but definitely something that immediately makes an impact the moment you turn it on, and you start to, of course, experiment with it. It immediately saves time. A little bit more elaborate, and this is a Google tool called Notebook LM, which is more for deep research. And what you do in this tool is you actually upload maybe large contracts or large complex documents into that tool. And instead of going into a public LLM, any questions and prompts you ask will actually pull the information out of the documents you've uploaded. So it's a much more controlled environment than a typical LLM. And so what we've seen with some of the prior audits is we go back to the audit team. We say, hey, we need the following information or documents from you. In the past, they would have uploaded it to a Google Drive. We would have started reading those documents and then go through the work program with those auditees. In this case, the auditees were one step ahead of us. And instead of uploading it into a Google Drive, they uploaded it into this Notebook LM deep research tool. And they said to my audit team, guys, I know you have a lot of questions from your work program, and it's fine, but first ask all the questions to Notebook LM based on the evidence and documents we've provided. If anything is then unclear or you have follow-up questions, we're more than willing to spend time with you. But we first want you to do your homework using the new tools that we now have that we have available. And I found that very interesting because on the one hand, even my team is pretty young. They're very IT savvy. Half of my team members have an IT background, technology, cyber, etc. But they still have a certain status quo of how they used to work in an audit, and they're not always willing to get out of that comfort zone and try new things. And so what I found interesting on this example is that the auditee was actually the one that kind of forces us to change. And I think that's a great lesson. If you're not changing yourself and if you're not ahead of the game, the rest of the company will force you to change and see the reality for what it is. And that means if you're not changing, you're staying behind, you will become inefficient, and you will lose your leading role as internal audit.
Thank you very much. I think that if by accident there is someone in the audience that did not understood that audit will become a tech business or tech job, I think that you gave a lot of examples that are showing, how incredibly our business, our job will change, thanks to, data management, AI, Gen AI practices. Thank you very much. Let's move now to Reliance, and I will pass the floor to my friend Paco.
Okay, thank you very much. Very interesting insights about AI, as we could spend the whole afternoon here, but we have to cover other of the topic of this panel, so let's move to the second one, is Reliance. One of the areas that we have looked at in the committee is reliance on the work of others and good practice in terms of combined assurance. There's a little guidance from the regulators on this matter, so how is the topic of reliance addressed in your industries? Marco, do you want to start, please?
Yeah, I think so. For a large part, we as a business, we are a lot less regulated than most of the people that are currently part of this forum. I would say we do have a regulated payments company as part of our platform, and so we do have to more and more take that into account. But I think the pressure here on reliance is more also one of efficiency and reducing duplication, etc. So the company is of course always under a lot of pressure to move fast, be agile, speed of innovation, the speed to market, etc. And so this is a great opportunity to be aligned with the other control functions and the other lines of defense, as we used to call them in the past. And make sure that we know who's doing what, and what assurance is already available. Can we rely upon it? Can we build upon the work of others? And so I think it's really a drive from an efficiency point of view, and historically might have started, of course, also with the external auditor relying on our work in the past as internal audit. We are, by the way, listed or a public company. We're listed on the NASDAQ, so we also have a SOX duty, let's say, or a reporting requirement. And so there we already did quite a bit with our external auditor in the past. I think what we've seen over the last couple of years is that internal audit was already relatively mature and getting more and more mature as we went along. And I think also the role of internal audit is very clearly understood, historically with a clear charter with IAA, which also helps, of course. So our role probably compared to maybe a risk or a control function in the second line is much more clear. We have a stronger mandate to also make things happen. And so I think what I see in reality is that we are a couple of steps ahead of other control functions that are typically still being either built, expanded upon, or mature. But we do see more and more opportunities to work together, build assurance maps together, align our planning, etc. And there are no kind of limitations to how we can then work together and rely on each other's work. I think I'll give you one good example. We've already for many years have been working in this way in the area of cybersecurity. And so when I just joined many years ago, we had a couple of good discussions with ourselves as internal audits, like how will we provide assurance on this very important topic of cybersecurity? For a platform company like ours, it's the biggest risk. It's the one that has the immediate time to disrupt. If anything goes wrong, website is down, we will have many millions of euros directly at stake, revenue, EBITDA, etc. What we also acknowledged is that if we really want to do all the auditing and assurance providing, let's say ourselves, we would have to recruit very smart, ethical hackers, very kind of top of the bill experts. One, I don't have the budget to pay them or to offer them a compensation that's interesting for them. And secondly, we can also not keep them happy with challenging and meaningful work. At the same time, what we saw is that our colleagues, the CISOs and the chief security officer, the security leaders, already were building a program where they would spend actually quite a bit of budget with boutique, let's say, cybersecurity firms, so ethical hackers, really folks that even compared to a big four, they would really be a couple of steps ahead of them as well. And so what we said is, okay, again, let's not spend the money twice. We could also hire those type of ethical hackers ourselves. Again, the budget would probably not allow it, but okay. And so we said, hey, if we work together, we can actually make sure that there's also a good amount of independence here when it comes to how do you select a third party, how do you scope. And we have defined a minimum scope for these exercises. And we're talking more than 60 kind of cybersecurity assessments performed by external parties, red team, purple team, threat assessments, etc., across the year. A lot of pen testing, of course. And so we have defined the framework, we've defined the minimum scope, we are involved in selecting the right party for the right type of assessment. And especially by the time that the results become available, we make sure that the reporting is accurate, it's fair, it's transparent. And especially the follow-up afterwards. For a couple of years, we actually ran the follow-up process to make sure that things don't stop with getting the report, but that actions are actually defined and then also implemented. And what we've seen that the cybersecurity function has grown and matured over time. And then at one point, they were mature enough to do the follow-up together.
Sorry, Marco.
Thing that a board member wants or needs is to hear one thing from the CISO. Things are going great. We're investing in all the right areas. Don't worry about it. And then hear from me, the internal auditor, that you should be very concerned and we're nowhere near where we need to be. It's much better, of course, if we align upfront and then together with an aligned story about our risk posture, we go to a board and have a meaningful conversation at that level.
George, what's your view in
Maybe
this?
Let me stop
Thank you,
there before I get carried away.
George, what's your view on this?
Yeah, if I immediately can extend on Marco's comments, I think in our case, we had our compliance-driven moment more than 15 years ago when obviously Siemens was facing some life-threatening, let's say, compliance crisis, and we had to revamp everything, starting from the internal control environment, the risk management, but also the audit department. And we used that opportunity to exactly implement what Marco has alluded to, also from an organizational perspective. So I'm responsible for all these three pillars under one roof, and this allows us to exactly be this stakeholder-centric or internal customer-centric outcome or process in order really to support exactly the members of the board with a harmonized, consistent, and also transparent piece of information, and not leaving the job to them to make sense of different opinions or different perspectives, each of them maybe definitely being relevant, but maybe using slightly different languages or slightly different methodologies. So we used this historic, let's say, event to really come up with a combined assurance approach in the best sense, for sure, at the same time safeguarding the necessary independence of the third line of defense. But other than that, exactly using a common taxonomy, if I may call it this way, without the negative connotations, but more in the sense to say, yes, we can use and speak the same language, talking about the different topics, either from a risk perspective, from a controls perspective, but also then from an audit observation perspective. And I believe this definitely has helped to improve the efficiency that Marco has explained in his example, but also I believe it helps to improve the effectiveness of the discussions, because the management board time or supervisory board time can be spent really on taking the decisions necessary and not spending their time on making sense of these different perspectives that slightly could mean the same but sound differently.
Okay. Last question about the reliance. How do you see the pros and the cons of a reliance strategy? Well, for example, in terms of coverage and validation of resolutions, and what are the cons, for example, in relation to duration and complexity? How do these play in your industries? George, please.
I think this matter of reliance, or this kind of a combined assurance, for me is definitely without alternative. I think the dynamics in our industries are so fast, starting from technology disruptions that we have already alluded to at the beginning of our conversation. But you could continue on with the geopolitical tensions, with the disruptions in the supply chain, and I could continue on time and again. So there's simply, for me, there's no alternative to really making use of the data points which are available within a company in order to combine them in the best sense to derive the best and maybe the fastest solutions or decisions that provides a kind of, if done in the right way, I dare to say, that can provide a competitive advantage. If you really combine these three different perspectives under one roof and use the available data, then I believe you can create some advantage compared to your competition, which otherwise might be very hard to accomplish.
Okay.
Yeah, maybe
Marco?
Yeah.
Please.
No, I fully agree with that answer on the, if you think like long-term ambition-wise. I think what we see in practice, sometimes some friction might arise because our planning process becomes a little bit more complex, because now you have to take into account what other parties are doing. They might have a different planning timeline. You might have difference of opinion, which is also kind of interesting. The most difficult discussions often are with other control functions, because they are very passionate about the topic as well, and so that can take up a lot of time. So I think the pitfall is to get kind of bogged down with the bureaucratic, do we have the same risk rating methodology and taxonomy, and you can lose a lot of time with that, and then friction builds up. So I think you have to keep in mind the bigger picture, that there's a lot of benefits to be gained. And you all have to compromise a little bit. I mean, the easiest thing is, of course, to work in your silo, not taking into account anyone else's needs, or you have no dependencies. But that's not the world we live in, right? You can only be, so successful, to a certain extent if that's your approach. And so I think true success comes from indeed partnering, aligning, and bringing that the message on the key risks to the company up to leadership in a combined and an aligned manner. So I think that's the price. Sometimes how to get there might be a little bit painful, with a little bit of friction, or maybe egos are at stake, etc. I do recognize that in the day-to-day, but that's where we need to be true professionals and step over those concerns and just get it done, I would say. Yeah. And if I would be the CFO or the CEO or the board member, that's exactly what I would say to these control functions. And don't tell me that it's painful or difficult. Just get it done.
What we have exchanged till the beginning of this session is clearly illustrating, how complex, our job is going to become, linked with, more risky than ever environment, with all what tech can bring to us, and all this is complexifying, I would say, a lot, the capacity of our limited teams at the end of the day to meet the challenges. So my question is the following one. How do you see audit in 10 years from now? And what is the most important challenges you see, in preparing your teams to these challenges?
So if I may start, I think you're highlighting definitely one of the key questions, which might be a little bit difficult to answer right from today's perspective, given the dynamics. But what I believe will remain relevant, and which is also a key enabler or key ingredient for the audit function to maintain this relevance, but also maintain the relevance to add value to the company, is really to make sure that we invest in our people. So in our case, the headline is Grow and Develop. So we have a couple of core pillars that we value and that we invest in, starting with a kind of a lifelong learning approach. So it's never sufficient. The knowledge that you have today is never sufficient to address the challenges of the future. We also encourage the people and the colleagues to take some personal stretches, to exactly venture into these areas where they feel maybe less comfortable as of today, where they need to learn more, they need to try, they need to prove themselves and sometimes fail in order to learn from that. And ultimately also, the third pillar is our career exploration, in the sense that on average, our auditors are with us only for more or less, give and take, 3 years. Which also ensures that there's the constant rotation from talents from within the business joining us for these 3 years, but also approximately 50% also external talent coming from the classic Big Four environment, but also coming from really hardcore technical expertise areas like coding, like cybersecurity, like in our case, electrical engineering and similar matters. And these kind of rotational approaches also ensure that we are not starting to run the risk of living in our own bubble, but have a constant exchange, either with developments outside the company, but also with the changes of the business models, the changes of the customer needs, also from within the business. So I believe, let's say, this combination of, let's say, encourage the organization to not be satisfied with today's understanding, encourage them to learn, have rotation in and out, and also complement your business understanding with fresh external expertise. I think these might be the key enablers that will help us to also be relevant in 5 or let's say 10 years from now, regardless of the specific content in question. I don't know, Marco, how does it sound to you?
Yeah, I think if I start with the good news, I think we see so much rapid change. We see new threats, but also great opportunities. I think geopolitical tensions are at an all-time high at this point in time. And then you add the technology disruption we spoke about and everything else going on in the world. So I think the good news is, the role of internal audit in such an environment is even more important, right? Because if everything is predictable, if everything just goes according to plan and is business as usual, you don't need internal audit so much to tell you where the risks are, what requires attention, what goes well, etc. Right? So it's really in these type of times of unprecedented change, let's say, that our role becomes more important. At the same time, also, it's a lot more challenging. We have many different stakeholders, their expectation and needs go up. And I think just to add to your answer and maybe translate it a little bit, I think we need to have speed, agility, still deliver, of course, the quality that people know of us and, adhere to the standards, etc. But we have to be able to adapt, right? I think that's ultimately a key for kind of surviving in the rapid change environment that we're currently operating in today. And I think we have a couple of things that really set us apart, the independence of our role, the fact that we can build upon many, many years of establishing a very strong function and a very strong community with sessions like today as well. People know who we are, people know what we can deliver, and not everyone and all the control functions can say the same. But if we don't change, have that speed and be agile, then relevance can also, of course, go down over time. So I think that's a great opportunity, but you do have to grab it to remain relevant in today's world.
Okay, thank you very much. Unfortunately, we are almost out of time. Thank you both so much for your participation and for sharing your thoughts so openly. I think that your experiences have made this panel truly valuable. Before finishing, let me summarize some of your ideas. Marco has been talking about the effective use of data and technology, describing that in your company you have expanded the data analytic approach to take enable auditing approach, to also embrace the many GenAI opportunities for internal audit function in the different parts of the audit process. giving us interesting and fruitful use cases that allow them to gain important efficiencies. He also has been talking about the combined assurance, explaining as an example of good practice that they have developed an integrated assurance approach to cybersecurity, together with the cybersecurity leaders in the company to prevent overlap and to provide a well-informed opinion to the stakeholders. And at the end, he has been talking about the importance of the adaptability of our function for the future. On the other side, George has given several interesting perspectives about AI, such as the industrialization of the innovation process as a prerequisite for AI-powered solutions, but generating an adequate and transparent framework. And he has explained several use cases, such as a Copilot integrated in the audit process, or the use of GenAI base for internal control documentations to optimize the performance. In terms of combined assurance, George has also told us that Siemens combined assurance through a structured model that integrates ERM, IC, and internal audit function, using a common taxonomy, but guaranteeing the independence of the third line of control. And finally, to get secure future readiness for the auditors, has explained that talent is sourced 50% internally and 50% externally, combining outside and inside perspective with business understanding. It has been a pleasure to listen to your insights, perspective, and experiences. On behalf of the audience and my colleagues, thanks again, George and Marco, for your participation. And now we are moving forward to the closure of this banking forum. Virpi, the floor is yours.
Thank you very much. Bye.
Okay, so all good things come to an end, and it's time to wrap up today's program. We will be wrapping up with some key takeaways, but we will also be giving you an update on what our banking committee is working with at the moment and what you can expect from us during the coming year as well. I have Maria here with me to do the wrap-up, and you already know Maria, but I also have with me Sakari Lehtinen, who is the newest member of our committee, and he's representing Finland, and he's the Chief Audit Executive for OP Pohjola Group. So welcome, Sakari, to the team. So if we look at the day today, I found the CEO keynote speeches really inspirational, but it was also quite interesting to hear how high the expectations are on us as internal audit during these very challenging times. Maria, what's your reaction to the CEO speeches?
I too share that sentiment. It was quite interesting, Virpi, that they both draw the conclusions between Europe and how Europe is at a crossroads, and how internal audit is at that same crossroad where we're pivotal, and we are needed to be interpreting between analytics and strategy, between today and tomorrow. I heard clearly that it's an unprecedented level, and I'm reading my notes, of uncertainty, with little certainty on what comes next. I thought that was what they draw conclusions on, and how we're supposed to be also bringing in that insight and foresight into the future of each of our organizations. Well, we heard from our host CEO here at Helaba that trust is the hardest currency that we have. So I found it interesting how they both brought Europe, the big picture, into the banking sector and into internal auditing. And for me, there's no doubt that internal audit is a trusted partner. internal audit, there's high expectations from our CEOs to ensure that we do utilize our positioning in the organizations to connect the dots, and connect the dots not only from today, but connect the dots into the future. So I found that very challenging, yet at the same time refreshing that our stature and effectiveness is definitely not a question in our CEOs' minds.
Absolutely. It means that we have really, really impactful role in the organizations where we work. And based on those CEO speeches, I think that importance is just growing, not becoming smaller. Then we had a session with the ECB, and couldn't help but notice that there are still some differences in the approach by the CEOs, what they expect from us as internal auditors, to be more strategic, to be strategic advisors, trusted advisors, whereas ECB also believes that we should be very much involved in auditing strategy processes, etc., but also, of course, emphasizing the need for us to stay on the third line, behind the third line, and maintaining our independence. Sakari, what were your key takeaways from the session with the ECB today?
One really important thing for me was that Katja Mastro-Domenico told us about requirements concerning risk appetite framework, design and implementation, and the importance of deep independent review of this by internal audit. And I found it really important, she told us that it's maybe not so important if it's yearly or what is the frequency, but that it's done deeply, and that the internal audit also looks at how the recommendations are implemented in the organization. So the follow-up work was also stressed very much by ECB. And I think Katja also told us good governance framework is the basis for sustainable risk-taking, so that we are in risk-taking business, but we must understand what risk we take, and internal audit is that in a crucial role also.
Then we had a chance to discuss.
For sure, we all have to put RAF auditing on our 2026 plans. If you haven't already done so, please double check that it's on there.
Yeah, good advice to all of us. Our audit strategies towards covering risk appetite framework, absolutely key. When it comes to the audit committee chairs, I think there we really heard how important it is that we are partners to the audit committee chairs. There is high trust between us, and we are able to talk about the challenges freely. My key takeaway from that session was that we are really expected to be more forward-looking. We are expected to do advisory, we are expected to do continuous monitoring, but it also sounded like we are expected to do continuous auditing with the help of technology, with the help of artificial intelligence and data analytics. So I think that was important message to me, and I also liked what our colleague Jonathan said here as well, that the auditor of future is already here. So the future is here, and we are supposed to fill that mandate already as well. Then when we heard about the other industries, I think it aligns very well with what the audit committee chairs were telling us. The speed of change is very rapid, and we can't just adapt, we must adapt, but we also must embrace it.
And she clearly put a path in place for internal audit. That if we're successful on that, there's just one road, and one road is into the next level within each of our organizations. So she has high expectations. They both had high expectations of internal audit, just as our CEOs did, and both found that both groups, and as our ECB partners also did, all three found the importance of internal audit and its stature and effectiveness in looking at today and in the future.
And then the whole question with AI, of course, was a key hot topic, and how challenging it is to audit AI because the old rules don't apply, but then also innovation being the key. So both of the gentlemen in the previous session were talking about innovation, bottom-up innovation, and being very creative, at least initially, in the adoption of AI also in the field of internal audit. And then perhaps as a lesson learned from those innovative exercises, we can come up with the framework as to how we will be using that.
I think that nearly all speakers mentioned AI skills, data skills, cyber security skills, but I liked when Barbara Lambert also mentioned emotional intelligence and communication skills. They are also of crucial importance for us all.
Absolutely. So we need a lot of skills and competencies to do this job well. And I think there are a lot of reflections for us as a banking committee here as well. How do we work with these topics? How do we progress this development of our profession going into the future? And maybe with that, I could mention a couple of updates to you. As many of you have probably noticed, we have also implemented some webinars in between these annual Banking Forum sessions, and we really want to continue with those. So we have been planning today what kind of webinars we will be organizing next year, so please stay tuned. We will have some really interesting and current topics there coming as well. We are also working on our position on reliance strategy, and by this we mean that this collaboration and reliance on the other lines of defense is a hot topic. We have discussed it quite heavily today as well, and we in the committee are working with our thoughts on this. So please stay tuned also for that. We are planning to publish a paper on this topic. And I think with that, I would like to thank you all very much for joining our forum today, and looking forward to continued collaboration with all of you. Thank you.